Blech. Take two. That, unfortunately, or rather, no, wait, stop. Hi, my name is Priscilla Seeland and I'm a realtor specializing in residential home sales in California, particularly in Los Angeles and the surrounding areas. Now, one of the questions a lot of my clients ask me all the time when they're getting ready to buy a home is, how do you go about getting a home loan? Is a home loan just a one product type thing? Is it just you either can get one or you can't get one, and if you can't get one, that's it? I have with me today a very good friend of mine, Irma Arteaga from Augusta Financial, and she is a home loan professional. So she's going to help clarify some of those questions. So Irma, home loans, is it just one product?
No, actually, some people think that it's one box fits all. There's different products, and we usually take a look at the scenario, and then we give advice and guidance based on their particular scenario.
Okay, so one of the most common loans, or rather the names of the loans that keep getting thrown around a lot, is the FHA loan versus conventional loan. So can you tell us a little bit about the differences between those two loans?
Mm-hmm. Definitely. Okay, so the FHA loan is a government-backed loan, and that loan allows buyers to come in with a lower down payment. Usually it's for buyers that have lower FICO scores, higher debt-to-income ratios, whereas the conventional loans were usually looking for people with higher FICO scores, a little bit higher down payment, and also lower debt to income ratios. So that's the difference. When I look at someone that comes in and wants an usually they want an FHA loan because they heard it's the best loan. Mm-hmm. But I usually look at the scenario and I give the advice based on their particular scenario.
Okay. Another word that gets thrown around a lot, another name that gets thrown around a lot, are jumbo loans. What exactly is a jumbo loan versus like a conventional loan?
Well, jumbo loans are essentially loans that are over $970,800. So any loan amount over that is considered a jumbo loan, and the guidelines are just a little bit different. Usually it's lower debt to income ratios and a few other little factors that are different versus a regular conventional loan.
Okay. What about those of us who are self-employed? Because that is the American dream, right? Not to have a boss, to work for myself, right? Now, does that mean I can't actually get a home?
Our self-employed buyers, we love them because, they come to us and they have tried going to get pre-approved with a larger bank, and they get turned down. And most of the time they say there's not enough income there. So the beauty of owning your own business is that you get to have a lot of tax write-offs. So sometimes people come in and they have their gross income minus their deductions, and then we're looking at the net profit. And sometimes that's not enough for regular conventional loan or FHA loan. So that's where we come in and we say, okay, your options are a bank statement loan. So what we do is we ask for 12 to 24 months of their bank statements. We're looking at deposits for the business, and based off that information, then we can provide them with a bank statement loan, given that there's enough deposits there for that particular loan.
So as long as there is income coming in some way or another, odds are there is a way for them to get a home loan and achieve that dream of owning their own home, right? All right, so I'm going to throw a wrench in the works here, okay? So now what about people who currently are in maybe their first home? They want to upgrade, their family is growing, but they have found themselves writing offers and not getting them accepted because all those offers are contingent upon them selling their home. Meaning, when they write the offer, part of the contract states that, hey, I'm going to buy your house if I can sell my house, because I need to get the money from my house to buy your house. So obviously an offer like that to a seller is not terribly attractive, right? Because selling your house could take a month, it could take a week, it could take 6 months. So does that mean those people, they just have to sell their house first? Is there a loan option for that? And what are the details?
Yes, actually there is an option. It's called a bridge loan. And this bridge loan actually sets us apart from other lenders because this is a product that we offer. So, for example, that seller that needs to sell that house, we can provide them with a down payment for their future home up to a percentage of their equity. So now they can write this offer non-contingent, and they have a better chance of getting that offer accepted. And the beauty of that program is that we customize it to each scenario. So everybody's different. Once we look at what that actual scenario is, we actually customize it to make it work. So we have options.
Bottom line is, if you want to get into your first home, if you want to get into your forever home, there are options out there. It is not just, hey, I want to buy a house, I'm just going to go get a mortgage, and if I don't fit these boxes, I'm not going to be able to qualify, right? There is options out there, so it's important to speak to a lender who's qualified, who's very knowledgeable, like Irma. That is all the time we have for today. If you have questions, comments, leave them below. But I hope I'll see you guys soon. Bye.
Bye.